All right. Some more tradingview.com, some more Secretwars, Stan Weinstein. Keep learning every day, guys. What do we have today? LLY, got an alert for that. That's Eli Lilly and Company on the New York Stock Exchange. Let's check it out, man. Look at that monthly candle. What does that look like? Ooh. What do I need? I need this. I need that. I need a trend line. Monthly defined breakout. Check. Monthly defined support. Patterns. Within patterns. Wow, guys, it's breaking out right now in a fury. July. 1 week left. What are my implied measured moves? That is the most greedy target, guys. All the way up here. 104. Greedy target. The shorter, closer, more probable target. We're right up to it, 95, and we're almost there. So this is probably the next move, guys, right here. 104, we already played it. We already got this target. We're almost there. Might be a little sideways move. After that, no overhead resistance, man, all the way to 104. Monthly defined. This is a convincing close. You see all this noise above? All these candles, these wicks above? That's noise, guys. Noise. False breakouts on smaller time frames. Even here last month, man, you could have said, oh, breaking out. No, but right now it is. Right now we're above. Unless there's a crazy wick and this gets sucked all the way back in and closes below the breakout line at 85, 86, then this is a monthly defined candle breakout, guys. Very, very constructive upwards. And now what we're going to see, this is probably a strong stage 2, stage 3, stage 4, small stage 1, stage 2, stage 3, when we're going on weekly. And this probably looks like a stage 1 here and a stage 2 right here. So with no further ado, let's go to Stan Weinstein weekly. You see my arrow, my scribbles, all these false breakouts above the monthly defined breakout line here. False breakouts, even last month, small false breakout, and finally now we're ready to rock and roll, guys. Zoom. What are we dealing with? What? Okay, let's remove all those trend lines. Where's the volume? Where is my volume? See, that's like one of the third things I look at. I want some type of big volume candle that sticks out. Something like that. That looks at least twice the average of the previous 4 weeks. But hey, today is Tuesday. This is going to be posted on Wednesday. So actually, the week might end up here, guys. If it continues, I think there we might have the volume. Oh, my eraser. So that looks pretty good, actually. All right, let's see where. This looks like my weekly defined breakout, but we never had the volume here, so there's no reason that we should have been in here. Even the construction, very constructive, even at this level here. What do we have at that candle? This one here. This candle is above a horizontal breakout line, above the 30-week moving average, but also it's the time that this is very bullish, where it's upwards. When you cross over from negative territory to upwards on the Mansfield Relative Strength Index, when you're compared to the index you're in, this is a very good sign. So right now, this, that's one of the checks. Oh, you see the volume. I don't know, man. That is not twice average volume of the previous 4 weeks. If this is highlighted in green, that means that the 30-week average is going upwards. It means the price action is closed above the 30-week average. So you have a whole bunch of these little criterias at a stand that you need to really get that, validate that exceptional winner. Hits that resistance line here, pulls back. Remember, from 1 to 3 months, 1, 2, 3, 4, 5 weeks, pulls back, goes back out. But we still don't have the volume, guys. See this breakout candle right here? I would have loved to have volume, but the volume would have been something about here. So we don't have the volume yet. We didn't have it yet. So I said, okay. Pull back the next week and then busting up. But this could be it, guys. Like a little lag. This could be the breakout that we wanted. So we just have to wait for the end of the week. The Mansfield strength is really starting to go upwards. Never buy a stock that the Mansfield is going downwards, even if it's above zero. I just read that today in the Stan Weinstein's Secrets for Profiting Bull and Bear Markets. Some stuff I glanced over, I guess, even the multiple times I read the book. That's why get some real experience, come back, read the book. I think one of the final chapters in Stan's book, he says that you will when you reread this book a few years later, and with all the market experience you got, you'll see in different light. You'll understand why he's looking for certain things. And there's a whole bunch of information there. Like I say, it's easy to start Stan, to get into it, but it's hard to master. And I'm still trying to figure my way around it today, poking around, asking questions on stageanalysis.net, figuring stuff out, guys. And that's part of the process. So will I get the volume here by the end of the week? It'd be pretty cool, guys, if we get that volume here. Definite breakout right there. And what else do we need? We're above the Ichimoku cloud. I'm not even considering that. Above, there's no overhead resistance, no red cloud. Even you see we're starting to get an uptrend right here. That's going to be the green support that's being defined. That's projected in the future. Guys, this is looking good. What else? So the monthly, we're good. Are we going to wait a week? I think so. We're going to wait a week. Why? Because we want that volume confirmation. We want that monthly confirmation. So the price action is probably going to end up here maybe. And we're probably going to enter here. Sell stop. Here's where it gets tricky. The trader's way. Depends what you define as your breakout pattern. If this is your breakout pattern here, just this small one here, I think the real protection is right here. So you could put it 4 to 6% below that breakout line. So if it's 87, 46%, maybe if you're the trader's way, if you want that extra protection, but put it below that pattern right here. Investors put it a little lower. So you'd size your position here. If you enter here and you sell stop here, don't lose more than 1% of your NAV. And that's how you position size. You might think it's not a lot for now, but you might have other occasions. You might get some sideways moves with 30 average trying to go upwards. And then after that, you might get another occasion here on the continuation breakout. You might have a pullback that goes back down here to the breakout line and then goes back. If it's on contracting volume, then you'd have an occasion to buy here some more. So you have a whole bunch of occasions that you could add on position. So why risk it all on the initial position? Take half position here, half position here, and additional positions every time you get a continuation break on the way, guys. Always make sure you have options. Understand all your options. So if the stock goes in a crazy parabolic advance right here, I missed it. I'm not going to wait for the pullback. I'll never pull back, guys. That is emotions. That's emotion management. It's going to grind on your emotion capital. And you want to mitigate, you want to reduce that by having emotion techniques. Emotion management techniques include you knowing your options, that there's pullbacks, there's continuation breakouts, a whole bunch of stuff you could do that's going to make sure that you don't jump the gun too early because you're afraid of missing the boat. All right? Cool, LLY. I guess I'll keep you in my flag list and see you at the end of the week. All right, guys. See ya. Ciao.